and we had a non-farm number. We'll get to our guest analyst because he's probably got it for us. Let's bring him in. It's Craig Bolanos. He's a co-founder and wealth partner at VestGen Wealth Partners in Chicago. Craig, thanks for being on the show, brother. How's it look? Did you get the non-farm number?
Well, listen, it's a midterm election year, so everyone's going to be content looking at a 4.3% headline unemployment with 115,000 job creation, which is well above the consensus thought. So I think this run-hot economy remains, Scott, and all of your viewers most certainly know the biggest secret everybody has going for them. The U.S. economy remains stronger than consensus clearly believes.
Yeah, it is amazing how resilient it has been, right? With and everybody's worried about watching this. I am too, basically. We're watching the job market, worried about the job market falling apart because of artificial intelligence layoffs. But it hasn't really proven to be, at least not yet, hasn't really come to fruition. Would you think?
Yeah, I think the key words are not yet, but I mean, what a great year. I mean, everyone loves a good revenge story. Everyone loves a revenge story served at the right time. And this has been a year where it's the revenge of the old economy. Look at the market leaders in industrials, in energy companies, in materials, in manufacturing. I mean, this broad-based expansion that we sometimes get when inflation looms larger and you see commodity prices booming higher. And maybe there's a little bit of brilliance in all this gameplay. I even look at things like the One Big Beautiful Bill Act that was passed on the 4th of July. They were smart enough to say tax-deductible auto interest when it was assembled in America, not made in America. Now, maybe that angers some people, but I think it's absolutely brilliant because we know our limits. But if you're assembling more vehicles in America, you do need more industrialization to do that. Maybe this is all interconnected, Scott. I think it's a good economic background right now.
It is. And I'll just so the viewers know, we were looking for a gain of 65,000 jobs. You're right. We got 115,000, almost double, not quite, but still that's a good number. And the unemployment rate came in as expected at 4.3%. Those were really the two biggest numbers. The only thing we kind of missed on by just about 0.1% is average hourly earnings. We're looking for 0.3. We got 0.2. So that would, if you have to throw a disappointment in there, it's not really a big one. But that jobs number, the market, we're not going to be worried just yet. I did a story about it yesterday on the Cow Guy Close, but it looks as though that still hasn't happened if it's going to happen, but we keep putting it off, so we'll see. I think what was interesting is there was a great story in the Wall Street Journal, Craig, about it's maybe not the fact that we're going to see a lot of layoffs, we just won't see a lot of hires. You know what I'm saying? So we're not seeing that people get these jobs right out of college. I had some people on. Jason Katz is great. He's a wealth manager over at UBS in New York, and he's saying that unemployment rate for kids just out of school is over 6%. It's the highest it's been in a while, and it looks to be getting worse down the road because a lot of those mundane data entry jobs are now being taken over by artificial intelligence. But the gains that it's providing for the economy with efficiencies and productivity way outweigh the negative news, because if you just look at earnings and surprise beats to the upside during this earnings season, it's just phenomenal. I mean, it's almost unbelievable to see what we've seen as far as these companies reporting. So that's why we've got a stout stock market. I hate to think, what would we be doing if we didn't have this Iran war on our hands?
Well, if we didn't have the Iran war on our hands, we might be trading at 76 or 7,700 on the S&P. Well, not quite, but maybe at a future state. Now, don't remember. I mean, listen, Scott, everything you said is true. And for all those young kids out there, you're going to have to retool. I mean, think of how many people used to start at the entry-level IT support desk. That's gone. It's replaced by the chat. And yes, it is has been this no hire, slow fire environment we're in, although I've had 2 back-to-back months of decent non-farm payroll, so it makes me question that. But I do still think that the best word, the best description, the best adjective I have for the jobs economy is fragile. It's got to be fragile. Everybody knows it's got to be fragile because of the AI. But again, all I can think about is, you want an example of markets climbing a wall of worry? Here it is. Oh my heavens, because the worries have loomed large. But I got to tell you, this market is so incredibly resilient. And remember, it's not just coming from technology, everybody. This is the revenge of the old economy. And I think that should scream to people to look under the hood of their portfolio and what sectors they're participating in, because energy is a real simple component. I remember when that was 6, 7, 8% of the S&P composite, it got as low as 3. I think a lot of things ultimately revert back to the mean, and people should be adopting strategies to incorporate such.
And if and the president's right about this artificial intelligence race, he wants to be number one at it, and part of being number one at the artificial intelligence race is you have to be number one at energy because it's going to demand so much, and that energy component has been so huge, especially now. And I don't think a lot of people realize how independent we really are and how that's really allowed us to do a lot of the things we're doing. And what was shocking to me is our production is equal to, or no, it's better than, we produce more on a daily basis than Saudi Arabia and Russia. I mean, I never would have thought the day that those two together we still produce more than. I mean, that's absolutely astounding. So there are some things happening. I would probably have to say this, that the Republicans need to do a better job at getting these messages out there, because I read it all day long. My jaw drops at how good the news is. But we always keep hearing about everybody having to pay more at the gas pump. And I say this, not to be a little partisan, but I will be a little bit partisan. We had high gas prices like this or higher in 2022. We had a CPI of 9.1% in 2022. Well, we're looking at about a third of that CPI right now, and the same gas prices. And I'm going to take the bet that this isn't going to last that long. So it's not going to be a full year of high gas prices, and it's not going to be a 9.1 CPI. It's going to be more like a 3.2. But what are you getting for this short-term price spike and a 3.2% CPI? It's hopefully a safer world. What did we get in 2022 for a 9% CPI and all those high gas prices? Absolutely zilch, nil, not a nothing. We got nothing. That was just bad administrative policy. So I think this is not a bad trade. It's just, I know that people need the cash today. It doesn't help me to tell them that gas prices are going to get better in 3 months. But how did you get through it in 2022? How did those airlines get through it in 2022? That's what I want to know. I mean, everybody's trying to blame all these things on high gas prices, but they were high in 2022 and they did all right. So I don't know. Maybe there's a little bit of scapegoating going on there. I'm going to leave you with the last 10 seconds before we got to go. Anything you want to get off your chest?
Well, for 10 seconds, I don't have much to get off my chest except to remind everybody, if you're still hanging out on Recession Island from 4 years ago, I don't know if there's any lifeboats, but you ought to start swimming to catch a piece of this economy.
Yeah, that's exactly right. Get on board. I'm on board. So I think it's been fantastic. And I did actually hear somebody talking about recession yesterday, and I'm like, wow, that's pretty stout to do that. Anyway, great stuff as usual, Craig. Thanks for being on the show. You always get the best days. Fridays, that's when all the news breaks. Appreciate you coming on. Have a great weekend. That's Craig Bolanos. He's a co-founder and wealth partner at VestGen Wealth Partners in Chicago. All right.